Welcome to the first episode of 3 Crypto Questions, a new short-form video interview series from Bitstamp where we catch up with top analysts, traders, and professionals across the cryptocurrency industry. I'm your host, Ben Pausty. Joining me today is Ria Bhutoria, Director of Research at Fidelity Digital Assets. Ria and her team recently released a report analyzing findings from Fidelity's 2020 Institutional Investor Digital Asset Survey. The survey included nearly 800 institutional investors across both the US and EU. Ria, it's great to have you on and excited to dig into this report.
It's great to be here, Ben. I'm super excited to join the show and chat about this with you. Thanks
Awesome.
for having me on.
Great, let's get into it. So Ria, I thought your report did a really nice job of framing the current state of institutional crypto exposure. So our first question for you, what institutions are investing in crypto assets and how are they gaining exposure?
Sure. The survey found that about 36% of all investors in the United States and Europe have exposure to digital assets through a number of channels. So either directly through futures or investment products holding digital assets or digital asset companies. Direct investment was the most popular avenue for exposure, with about 60% of investors with exposure holding digital assets directly. When we looked one level deeper at which segments have exposure, we found an encouraging diversity in investor types. So about a quarter of investors with exposure were crypto, hedge, and venture funds. High net worth investors made up about a third, and financial advisors and family offices made up the majority of the balance. The portion that's explained by pensions and endowments was in the low single digits, but we're seeing interest growing among these larger investors who generally take more time to form and implement an investment thesis.
That's interesting. Yeah, I feel like pensions have been the institution that a lot of people have been waiting for. So it's good to hear there's some movement going there. That's awesome.
Yeah.
So second question, what were the most appealing characteristics of crypto assets according to institutional investors?
The three almost equally appealing characteristics were that digital assets are uncorrelated with other assets. They're an innovative tech play and they provide high potential upside. So digital assets like Bitcoin have historically been uncorrelated to other assets over long periods of time, despite shorter periods of higher correlation during uncertainty and turbulence, like we saw in March and April this year. The consistent return to lack of correlation in the long run is something that's really rare, and also something that the industry is watching closely, especially as we enter this new economic paradigm. On digital assets being an innovative tech play, the value of these assets is tied directly to the underlying technology and the use cases that it facilitates, and the industries that it could disrupt or expand. It's also really closely tied to the community and talent of developers building on and around the platform, as well as a number of users that gravitate to the platform. And it creates network effects similar to internet protocols and Web 1.0 companies. But what's unique about digital asset protocols is that they have investable assets that are accessible to essentially anyone earlier in the life cycle. And this is super compelling because investing in innovative technology in its early stages before it achieves that mainstream adoption has historically yielded high returns and upside. And I would also mention that some of the other features beyond the top three in the survey were that digital assets enable decentralization, they're free from government intervention, and they may offer arbitrage opportunities, and they're censorship resistant.
Great. And given that the report covered both US and EU, did you see any differences or anything that really stood out between the US and EU institutional investors that you interviewed?
Sure. So we learned that 82% of European investors found something appealing about digital assets versus about 74% of US investors. And this suggested to us that European respondents were slightly more favorable towards digital assets. The other difference that we noticed was in the ordering of the top three most appealing characteristics. So for European investors, the most appealing characteristic was high potential upside, whereas for US investors, it was that digital assets are uncorrelated with other assets. Another interesting discrepancy that was a little bit lower on the list was that more European investors found the feature that certain digital assets are relatively free from government intervention to be an appealing characteristic. So specifically, 25% of European investors said that they found this to be appealing versus about 10% of US investors. And our hypothesis around why was one reason could be the prevalence of negative interest rates in the region, and maybe a feeling of overregulation among European investors relative to their US counterparts.
Oh, very interesting. It's great to have that view from both sides of the pond. It's great. And third question, Ria, what did institutional investors cite as the biggest barrier to investment?
So 53% of all investors cited price volatility as the top obstacle to investment. I think while volatility of digital assets has definitely come down in the last 3 to 5 years, it's still orders of magnitude higher when you compare it to traditional assets like equities or fixed income. And I would attribute the outsized volatility to a couple factors. First, exchanges in a light touch regulatory regime that offer traders the ability to take on significant leverage can exacerbate the moves up and down, and these exchanges still host significant volume. I think another explanation could be the lack of consensus on the narrative of digital assets. An analogy that I've seen a few times, and most recently in the Paul Tudor Jones investor letter, is that digital assets like Bitcoin are similar to gold in the 1970s. So back then, when the convertibility of dollars to gold was terminated, gold also experienced a highly volatile decade. It took some time for investors to figure out whether it would retain its value and if it was truly a store of value. And I think that digital assets like Bitcoin are in a similar place right now, with investors still trying to figure out what is the agreed upon narrative and use case.
And just a quick follow-up on that. How do you think we get past this over the next 5 to 10 years? If you're looking ahead, and let's say we look ahead to 2030, where do you think we are on this issue then?
Yeah, I think over time, volatility will dampen. First of all, as narratives converge. I also think the growth of volume on regulated platforms that limit leverage, as more institutional money enters the space, will have a positive effect. And then I would also add growth in investment products and derivatives that allow investors to more comprehensively express an interest and a view in the market.
Great. And Ria, one bonus question for you. It's a question that's very important to us here at Bitstamp. If you had to choose between a bull, a bear, or a whale as your crypto spirit animal, which one would you choose and why?
I think I would go with whale. And my reason why is more from a nerdy data and research perspective, because I think that tracking the change in the number of whales and trading or holding behavior of whales can give insight into the sentiment of a really important group of market participants. And I think this is definitely one input to gauge where in the market cycle we are, bull or bear. And the nature of blockchain technology and digital assets allows us to do that in real time, which I think is really cool and unique. So I will go with whale.
Spoken like a true research analyst, Ria. That's awesome. Well, that's a wrap. Thanks again for joining us. Where can people go to find you, Ria?
So I'm on Twitter. My Twitter handle is @Ria Bhutoria. And you can also find all the research we publish on our website, fidelitydigitalassets.com.
Awesome. And as a token of our appreciation for coming on with us today, we're going to send you a Bitstamp merch box that'll include a hat and a Bitstamp whale t-shirt. So thanks again.
I'm so excited. I've been missing the swag from conferences, so I'm very excited to start adding to my swag stack.
Hopefully we can help fill that void until the conferences get going again. Thanks again, Ria. And to learn more about Bitstamp, please visit bitstamp.net or follow us on Twitter, LinkedIn, and Facebook. More episodes of 3 Crypto Questions coming in July. See you all soon.